All right, welcome back here to Thrive America. Joined by practically my neighbor here in Marietta, Graham Wickham.
Yeah, thank you very much.
Thanks so much for being a guest on the show. And one thing I was thinking about while we were in between the segments is there's so much media and fear, I think, about the economy right now. As far as you turn on the television, you see reporters almost freaking out about what's going on. Is there a mindset we should be in as far as, like, is there a magazine that you recommend, or is there almost too much get too much investment into our paranoia? And what do you tell your clients about the media and what's going on in the world around us?
Well, the answer to the first part is yes. I always talk to clients that you probably couldn't pull up 5 different magazines and get one synergistic comment. Everyone has a different opinion on what's going on, when, how it's going to affect you, and what you should be doing. And what you should really be worrying is about you. Don't worry about your neighbor. Don't be concerned with what's going on with fruit in Brazil. Worry about yourself, your situation, and if you're covering, if you have your long-term plan set up, if you have your short-term plan set up, and you have your emergency set up, you should be in a fine situation. In terms of where do we view what's currently going on in terms of media, I would look at media as much like I did with unemployment. Unemployment is a lagging indicator. The media is a lagging indicator. A case in point might be that I always also comment is that when you see your company or your investment or the market from the back page to the front page, you need to question where we're at that particular time. Usually that means if you're investing in that particular stock, well, the news is already out and the run might already be over. Take that in the same situation with the news. We're in a recession. Well, that might be a situation that maybe we're in the 6th or 7th inning and not in the first in that situation. We might be towards the end. If you maybe read about some situations on the back page or the stock on the back page, that might be the opportunity, could be the opportunity at a particular time to get something on the ground floor.
Yeah, I've seen so many different advice from so many different sources.
Right.
It'd be hard for me if didn't have someone like you on my side to figure out where to go or how to navigate my finances,
right,
and so forth. So let's get into some of these questions. Like I mentioned before, Graham reached out to his fan base, to his client base, and asked them what's on your mind. And so I think we got some very intriguing questions that I'm gonna throw at you here, Graham. The first one is from Stephen Johnston. And he writes, is it now a good time to buy a car or a home? And talk about, I think you may know the gist of this. Is now a good time to go out and buy a home or a car, things like that, when everything's kind of down?
Right. Not to beat up with the emergency funds, but I think as long as you have the stability in the job that you need, you have the funds set aside in that emergency fund that I mentioned a couple different times, I think it's a great time. There are steals of deals out there, or many deals out there that you can go and get. Do you need a new car? Well, maybe a used car will accomplish what you need, and you can save thousands of dollars. Maybe you like that leather couch, but when the economy's doing so well, supply, demand, the price goes up. Now the demand's pulled back, the price is down. Might be an excellent time to buy that couch.
So it seems like make a logical decision. Melinda Alexander writes, I'm sure you get this all the time, what's the best investment we can make right now?
Well, that's a really general question. It really depends on your situation. Let's go back to being young and you have 20, 30 years before you're thinking about using the dollars that you worked so hard for and saved up for to start supplying income to you. I would say solid investments, maybe in mutual fund indexes, some solid investment companies might be a great opportunity right now.
Okay. David Stewart writes in here, he says, as a business, how are you assuring your clients in a time of instability to stay on schedule with their responsibilities? And I think he's kind of referring to as a business owner, I kind of sense here. Does that make sense?
Right, absolutely. Yeah. Well, I can't comment what everyone's doing, but we do get comments from our business clients, and even talk a little bit about what we're doing. And that is, you got to look inside your organization, and this is where you got to make adjustments. You got to make those hard decisions. And if something's working for you and it can add to revenue or it's keeping you out in front of the public. So when times are better, they're going to be thinking about you when they're ready to make a move. You should have that in place. If you are running your organization still in a loose fashion and thinking that, well, things will just turn around tomorrow, you could be setting yourself up for some disaster.
Gotcha. Cindy Cowan writes in here, would Treasury bonds still be a good investment?
My personal opinion is no, I don't think they are. Quick general answer to that is when you see interest rates pull back, bond prices go up. So we're seeing an inflated bond price. An example of that might be back in 2000, 2001 with the tech bubble that most people unfortunately are familiar with. I think we are setting ourselves up in that same type of situation. I don't think we're looking at the catastrophic pullback like we did because it's a little bit different instrument. But I think they're quite inflated, and I think individuals can go get the interest and preservation that they're looking for with Treasury bonds in many different areas.
Gotcha. I'm going to jump here to Susan's question here. She wants to know how can she get more aggressive with her investments so that she can recoup some of the investments that she's lost?
Right. The answer to that is don't try to do it overnight. Don't try to do it all at once. Think about a plan, a strategy, implement that strategy, and follow that strategy on the upside as well as you protect yourself on the downside. We always look at, well, if an investment's going up, it's going to go up forever. If it's going down, it's going to go down forever. Well, that's not true. They don't go up forever and they don't go down forever. So have a strategy. Have reasonable goals and objectives, and also have a risk management strategy. And that is, if that investment pulls back to a level where you're not comfortable, or it's starting to get into invading your goals and objectives, it might be a time to review that position.
Gotcha. We have an anonymous submission here. Is now a good time to buy more money, to put more money in stocks?
Right. I do, as long as you're meeting all the other parameters that I talk about. You got your emergency funds, you got your long-term, your short-term goals, your job stability's in place. As long as you have those lined up, I think we could be looking at an opportunity that we won't see for possibly another decade.
Great, Graham. So we're going to bring you right back. I'm going to ask you point blank, what's been your biggest mistake that you've made in your career, and what have you learned most from it? And then also some strategies to help everyone thrive in this economy. So we'll bring you right back for that.
Sounds great.